Hi, this is Patrick Wright from AA Commodities and Investments with your weekly recap video. So I guess I decided to do this video because we've seen a decent rally in the grains. We're going to focus on that today, but let's just go ahead and start it off with the disclaimer here. Just remember that what I say here is a direct trade recommendation, and if you'd like to read the full disclaimer, please pause the video now. All right, so let's go ahead and jump into it. Basically in the last 48 hours here, we've added about 25 cents onto the corn market. That's just really been on just the threat of prevent plant acres and weather. So there's there's been a lot of pop-up showers over the Midwest. Most of the Midwest has got like a quarter inch of rain to up to an inch and a half in some isolated areas, and it's been spotty. So it's keeping a lot of guys out of the field. Over the weekend we had the Eastern Corn Belt. They got a lot of rain, so that'll keep a lot of those guys out of the field and things like that. I guess Illinois and Indiana and the Eastern Corn Belt are taking the brunt of it, as well as the Delta. So that's played into the soft red wheat crop, and the Delta as well. So, we've just been rallying on corn. Wheat's been rallying too. That's been helping us out. We've rallied essentially to this 371 level. That's my first resistance. My second resistance target would be the 375. Then this trend line here at like the 378 level. And if we could get all the way back up here to the 385, 390 level, that would be, pretty good for this market to do. Funds are really short, so they're basically falling all over themselves to get out of this market. So they're covering their shorts. Will the prevent plant issue, become, a large enough issue for them to run it all the way to a net even or even a net long? We'll see here over the next few days. What we do have here is just a really, really wet forecast here. This is a 7-day precipitation forecast for the Midwest, and that big red blob in there is Iowa. And we're going to get about 3 to 4 to 5 inches in some areas, in Iowa and the southern part of Minnesota. This is going to keep us out of the field here and keep progress pretty low here for the next week. So we'll look for these delays to continue on here. There should be some decent planting going on this week for the guys that missed the rain and stuff, last night. But other than that, I think the prevent plant deal is not out of the woods yet. So that's kind of what I wanted to talk about here. So I've got a prevent plant scenario. This is if we cut 3 million acres out of the corn crop. You'd be looking at 89.8 million acres and 82.4 harvested. And that'll get you a carryout. This is a trend line yield of 176. That would get you a carryout of 1.95 billion bushels, and that would have your stocks to use at 13%. That would be, that would be pretty tight yet, and that would be what we would need. On the flip side of that coin, if 2 million acres of those 3 million acres go to soybeans, we're going to be looking at 86.6 million acres planted, and that's the trend line yield there. And that would bump up our ending stocks, about 100 million bushels or so, 80 to 100 million bushels. So it's not, a terrible amount, but certainly not helpful to the soybean situation. And I left exports in there the same. Those could definitely change with the African swine fever, but basically that's what we're looking at as far as our balance sheets. This prevent plant deal is a lot more helpful to the corn market than it is the soybean market. So yeah, just another thing to watch here. There is a lot of old crop corn out there. There's a lot of new crop corn out there to sell as well. Farmers really kind of got caught off guard in this last, in this sell-off in these last 3 months. So there's a lot of grain left to market. So I would look for, if you do see a further rally here, maybe another 10 cents or so, I would look for basis to start ticking lower. At least where I'm at in Northwest Iowa here, we're about 20 cents or so above our normal basis levels in most areas. So, if we do get another 10-cent rally, they might only give you that. They might only give you 5 cents or so. So we'll continue to monitor that situation, but it may not be a terrible time to lock in basis in here near term. I think also near term, this would be a good opportunity to get long corn on a retracement lower. You can talk to me if you want to do that. Going in here to July soybeans, I'll give you a couple of technical points in here. I think that this $8 mark, what we could not get a close below in July soybeans, the $8 mark is good support in here. The 840.5 level, that's the gap level. So if we get up to 840.5, you can see they're a little bit lower on the overnight. But yeah, if we can close that gap, we can probably see another retracement and test that lower. I think that if we get up to the mid 850s to the 865 level, I think it would be, smart and prudent to get some puts on, just as a short-term protection there. So, just kind of taking what you can get here. This rally, if we see a further rally here, you need to reward that as a producer. You certainly don't want to have, feel like you have your hands tied in this thing. So I'll be calling you guys when I have an advantage alert going on. But yeah, just continue to monitor this thing, continue to watch it. And yeah, thanks for watching.